Hello, my name is Chris Belchamber, and here is my video. I want to save the time of my readers and highlight what's important in this week's blog. I highlight that markets are triggering a signal between US stocks and gold that we've only seen three times in the last 140 years. And it's not just a short-term signal. We've already seen that gold has outperformed the S&P 500 over the last 3 years, and it's done so with less volatility than the S&P 500. This signal fits the emerging policy fundamentals that I've been discussing for a while. We're in a debt trap, and it doesn't look like we're going to be able to reverse that. If that's the case, then we have to go forward. And it means that even though the culmination of the debt trap may be years away, it doesn't mean that it's going to be obvious years in advance, and people are going to start positioning for it. And that's what we continue to see. Last week's interest rate cut from the Fed saw the dollar go down, gold go to new highs again. What's strange about this is that US investors don't seem to be reacting in the same way as international investors. I've highlighted in blogs earlier this year that the family offices and households, they have an allocation of really only 1-2% in gold. It's not really much of an allocation, and certainly not compared to international investors. So there's something about the way US investors are thinking about this is making them late on what really is still an emerging major trend. So I wanted readers to be able to take a deep dive into the deep history of gold and why this is such a fundamentally strong move that's being triggered in the markets. It hasn't really taken off, but the setup is very convincing, and you don't want to miss the move. So make sure that you're well aligned and you have a good allocation and strategy.